Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so here in this video, I did want to do a follow-up on NIO because I was just going over the list of tickers that I hold and or am interested in. And something here caught my attention. I wanted to share it with you guys. And so this is really going to be focusing on going over options data, which I'm really just using to try and understand if things have flipped bullish, bearish, whatnot, not necessarily suggesting that any of these calls or options would be good investments because they are very risky, but there is a lot of data with them. And so I did want to go over that, and also I'll go over the chart of the stock a little bit as well. But so anyways, this option, this call that I currently do hold one contract, so it's not a huge position. My average is 90 cents, so that's 90 cents times 100 shares per contract equals $90 risked on this contract. And we can see that this contract is currently trading at a price of $1.51, so that's $151 per contract. It did hit a high over here of, I believe, $1.80, has pulled back some. And this is the $3.50 strike call, so it is in the money because NIO closed on Friday at $4.92. So this contract is in the money with that strike of $3.50. And this contract does expire in September on the 19th. And so I wanted to go over that because there is one thing that really does stand out to me about this chart, and that is right here with the volume. I don't know how well you guys can see that. I did overlay the volume onto these charts, so they do overlap with the candles a little bit, and actually maybe I can adjust that there so you can see that spike in volume for this contract, which I believe was issued back in February. The first candle that we see here, February 4th, very low volume. Let's see, volume of 200s, stuff like that, nothing too crazy. But then we see this spike here, very massive spike, not hundreds, not thousands or tens of thousands, but a volume of 174,954 contracts traded on that day. So that is massive. And that is, following this consolidation here at the bottom, hitting a low of 32 cents. A couple days later, the range was from a low of 38 cents up to a high of 63 cents. So, getting close to a 2x on that day from the low to the high. And then the premium in these contracts has just rallied following that, with volume diminishing, also, flattening out. And so I'm really curious if this is going to continue going up, if I should take profits, if I should hold, what's the level I should consider taking profits at. And, I just feel like this is probably going to continue going up, whether it's this contract, again, very risky, or the NIO stock price. And just to note, before I do flip over to some other data, get into the chart in a minute, the stock chart, the high over here for this contract was $2.13. That was hit on March 11th. I do think that we will be going beyond that, but I, of course, could be wrong. And so some of the things I did want to point out, so this is the data for that contract, the $3.50 call that does expire in September, 54 days between now and expiration. And what we can see in the data down here, we got a lot of red, some negative numbers. So there has been some selling. And so that does get me a little bit concerned. If I, let's say, held more than one contract, I'd probably be trimming just to be managing that risk. So this does make sense to me. It's not super surprising, but at the same time, it is a little bit concerning. But then in the last video that I did on NIO, I had talked about the open interest here being around 200,000 contracts that are open. And we so far still do see right around there at 192,280 contracts open as of Friday, July 25th there. That's how many contracts were open. We did see a volume of 269 on Friday, so this could be coming down to, let's say, right around 192,000. Worst case scenario. Still above, though, because 269 is greater than that difference of 280. But anyways, if we do look back here, I might actually just scroll down here so we can see the numbers. We do have a lot of buys back here. So on July 11th, we did see an increase from the day before of 164, almost 165,000, when on the day before, on July 10th, we had an increase of about 174,954. Exactly, I should say, about 175,000 contracts. And so that was July 10th. If we do look back over on the data here, July 10th. Yeah, so I mean, I think that something has completely changed here with NIO. Specifically, this contract, but generally the stock. And so I think that it has most likely bottomed and will continue to go up because we still see more than 175,000 of these contracts being held. Sure, some profit taking. I believe this was a rolling of a contract or, just managing risk. I'm not really sure. I'm not going to dive into that here, but we still see, more than 175,000 contracts open, whereas on the 10th at the start of the day the open interest was sub 10,000 contracts open, and then it became 175 approximately, now close to 200,000. So looking very, very good there. And then let's see over here in the data for contracts in general for NIO, what we can see. I'm just going to actually expand this so we can see it a little bit bigger. What we do see is volume increasing and staying elevated over the course of the day on Friday, the 25th. But we do see net call, and net put premium in the green and red, relatively speaking, respectively speaking. We have the green going up, the red going up. And so on Friday, we saw an increase in net put premium of $1 million. So that's a little bit bearish there. That's bearish. But then we see a net call premium increase of about just shy of 800,000. So that's bullish. And so, net, this is slightly bearish, as we can see with the bear bull slider here, 45% bearish side and, less than that, bullish side. But then if we do look over at the max pain, we can see that the max pain for Friday, July 25th, was $4.50. And so I was thinking that because the stock closed below $5, that was, a little bit bearish. But max pain was $4.50 and we closed above that. So I think it would have been great if we closed a whole strike above or above $5, but we closed right around there. And so next Friday, coming up on August 1st, we do have a max pain of $4.50, so I could see us pulling back down to around there. But then the 2 weeks after that, so the Friday of August 8th and then of August 15th, max pain returns back to $4. And so I think that is where we could maybe start to see, the next moves higher, because I think over the next week we could kind of, just calm down, pulling back to around 450, around max pain. But then if we hold 450, start to go higher, we would then be above the max pain the 2 following weeks. So I think that would look really, really good. And so looking over at the chart, we did hit a high on July 23rd, and that was at a price of $5.21. Looks like we got rejected here. I do have what looks like 100% Fibonacci extension, so that's in red here, which I should actually move that down to here. And so, that's kind of an invalid one. I would say I should have had it moved down to here, but then that does put the price for that 100% extension up at like $4.77. We are currently above that. But yeah, let's see. Since we are above, I would want to be looking for levels of resistance. And so I'm just going to add the, let's see, the 1618 is already on there. And so that is up here at around 565. And we do see a confluence of levels up here as well. We do see this orange uptrend here, as well as this orange downtrend that was, notable resistance in the past. And so we do have a confluence of those levels along with that 1618. And so that's around 565. So that could potentially be the next target. And let's see, we did get rejected from, actually, there are two blue solid lines. Sorry, just bumped the mic. Two blue solid lines. They were dashed lines. They were gaps. As you can see over here, we had closed on March 19th at a price of 517, marked by this blue line, blue gap, dashed when not filled. And then also we closed on March 20th at a price of 471. And that was also previously a dashed line, but we have filled both of those gaps. So it's not really too surprising that there would be some resistance there that we might be getting a little bit of rejection. But so what I would like to see, if we are to be pulling back, maybe coming down here to the 382, the 38.2% Fibonacci retracement around 450, which is also max pain for this coming Friday, I would not be too surprised if we do, something, like this, and then maybe start to go higher. That's, what I would like to see. I would like to see volume start to come down, start to really calm down as we do pull back to form a bottom. And then when we do get back to 450, volume to pick up, stock price to get pushed higher, and then we really, start to break out to beyond $5.21, potentially getting up to, like I said, around 565. Here I have it drawn to the arrow, just being a doodle, to around 544. And that also corresponding with the orange downtrend there that, is based on the highs that were hit on December 29th, I believe, the end of December, the end of the year 2023, and then also the high here from, I believe that would be September 30th of 2024. So I do think we could be seeing some resistance there. I do think we could be seeing some consolidation. But I do think that could be corresponding with the bull flag if we start to see volume cooling off and then we start to move higher. But, I don't necessarily think this would be the end target around 540 to 565, somewhere in that range. I think it would actually go higher. And the way that I would kind of assess that target would be by doing a Fibonacci extension. So going from the low here of 334, going up to the high of, 521, and then pulling back to just approximately around 450 to get an idea of where price could be going. So let's see, 334 is correct, 521, that is correct, and that does look like that is lined up perfectly with that 382 Fibonacci retracement at $4.49.6. So I'm just going to leave it there. I was going to adjust it to 450, but I'll just leave it there. And the proportions, what we want to look at, really just the 100% extension, which is going to be the distance from the bottom here to the top, taking that measurement from the bottom here going up. So that is going to be the 100% extension. And, just for fun, I will also kind of demonstrate how you get that extension in just a second. But I do want to adjust the color here so it does stand out. I'm just going to make it light blue. And then I am going to just take this trend line tool, mark from the bottom here up to the top here. And I am just going to have a little bit of fun with that, make that an arrow, make that a little bit thicker. And I am going to, let's make that purple just to have some fun with it. And then I'm going to move that from there over to here. And that should correspond with the 100% Fibonacci extension. Oh, wow. That lines up perfectly. And so that is how you get the 100% Fibonacci extension. It is just that distance extended from whatever the bottom might be. If that is 450, that would be suggesting price could be getting to around $6.36, 37 cents, right around there. But, it might be bumping into some resistance around 565. So do keep that in mind. If we do get up to 630s, somewhere around there, I could see it bumping into some resistance, maybe consolidating to pull back to find that orange uptrend as some support, maybe form another bull flag, and then head up to that 1618, which would be around $7.52. So that is what I would like to see. And this could be, let's just keep the time frame in mind. This could be, well past September, so the expiration of that contract. But this could be going towards, like the end of the year or the end of November is where I have that line doodled out to. So maybe NIO gets to around 750 by the end of November, maybe pulling back to 450 over the course of the next week or two before starting to go higher, maybe finding some resistance around 540 to 565. If it does break beyond that, I think the next stopping level would be above $6 to maybe pull back to find support around 580. Consolidate with volume down, suggesting a bull flag, and then a move higher. And then, let's just do, kind of another approximate Fibonacci extension. That purple line here, let's just move that over to here. And that actually does match up pretty well with that 1618 extension to around 750. So I think that is pretty cool. Will we maybe be seeing a retest of around 8 by the end of the year? I have no idea. I'm not trying to get my hopes up about that, but I do feel like looking at the chart here, I think things look really good. Looking at this contract here, I think that things look really good with that massive amount of volume, about 175,000 contracts being purchased on July 10th. And for the most part, them being trimmed a little bit, but for the most part, those still being held. That makes me think that NIO is going to continue to move higher, whether that's with this contract, the $3.50 strike call that expires in September. Contracts risky, stock less so. I think that a pullback to 450 would be an opportunity before this does continue higher to around $6, let's say maybe to 750, which would represent from 450, that would represent about a 40% move to the upside, getting to around 637, getting to around 750. That would represent about a 65% move to the upside. So a lot of potential with NIO if we do continue to see these bullish things going on. But anyways, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching, and have a great rest of your Sunday, great weekend, and I'll see you in the next one. Take care. Bye, guys.